Hello, and thanks for joining us. There's less than a minute to go before we officially kick things off for today. We've got loads of insights to share with you. Make sure you stick around and take it all in. First, let's begin by acknowledging the traditional custodians of this land.
We acknowledge the lands of the traditional custodians across Australia. We recognise Aboriginal and Torres Strait Islander peoples' continuing connection to land, water and sky country. We acknowledge the wine regions and hundreds of different nations around this continent, and the ancient soils on which we stand and grow. From the Wadani saltwater peoples of the Margaret River in our west, to the East Coast Sunrise people of the Yuin Nation, and the Southern Island and Saltbush peoples of the Nioni peoples of Tasmania. Today and always, we pay our deep respects to the custodians, those who went before and those who will follow, as the knowledge holders of tomorrow. This is Australia.
We would also like to acknowledge that we are coming to you from the traditional country of the Kaurna people of the Adelaide Plains and pay respect to elders past and present. We recognise and respect their cultural heritage, beliefs and relationship with the land. We acknowledge that they are of continuing importance to the Kaurna people living today. And we also extend that respect to other Aboriginal language groups and other First Nations. Well, good morning everyone and welcome to the Global Market Update. My name, as it says on the slide, is Paul Torali. I want to acknowledge from the start that many in our Australian wine community are doing it tough at the moment. We completely understand. The purpose of today's webinar is to update you on the state of play in the global wine market and how the Australian wine industry is positioned to respond. We're exceptionally pleased to have over 800 registrations for the event today, and many of you have already sent through questions. We look forward to receiving more throughout the session. I'll talk you through how to do this shortly. Before I introduce our first speaker, I'd just like to run through some brief housekeeping. Today's program is planned to be broken up into two sessions with one short break around the middle. There'll be an opportunity for some of our speakers to answer a couple of questions after their presentations, and the team will be online responding to your questions also. There is a lot to cover this morning, so I apologise up front if we do run slightly over time. A recording of the presentations will be available to all attendees as soon as possible after the webinar. At the bottom of your screen, you should be able to see a Q&A function. You can use this function to submit a question, and we'll endeavour to answer as many questions as we can throughout the webinar. Any questions that we're unable to answer today will receive a follow-up response after the event. If anyone should experience any technical issues during the webinar, you can try and refreshing your URL or logging out and logging back in again. We would recommend using either Chrome or Firefox as your browser. And I guess, gentle reminder, please to also be respectful of others when using the Q&A function. Lastly, if you want to stay up to date on the future Wine Australia news and activities, you can sign up for our newsletters via the sign up page on our website. With that out and said, let's get started. First up this morning, I'd like to introduce the CEO of Wine Australia, Dr. Martin Cole, who'll provide an overview of the One Sector Plan currently being developed by Australian Grape and Wine and Wine Australia. Welcome, Martin.
Well, thanks, Paul, and good morning to everybody online. It's a pleasure to spend a few minutes with you today to take you through what we've been doing to try and pull together across industry or One Sector Plan together. Look, I think it's a fair question. Why do we need a plan when we have a 2050 vision? I think that's a fair question. But I think, look, any long-term vision probably couldn't have foreseen the current changes to the environment that we're in at the minute, you know, with a global pandemic, a loss of the China market, 30% of our export value, and massive instability on the geopolitical front. Now that's impacted just about every facet of the business that we're in, whether it's our markets, competition, our terms of trade, think about cost of borrowing, cost of inputs, etc., and increasingly demand for sustainability credentials to respond to global challenges of climate change. So what I'll cover through in this next few minutes is kind of why do we need a plan, what's in the plan, share a little bit about what we're hearing, and then next steps. Now, I think I've already talked a little bit about the operating environment that we're in, and as Paul has said, you know, we acknowledge that I think a lot of folks are doing it tough around the grounds. We've had, you know, national vintage, which is the lowest in a generation. We've had the latest export results look at a 10% reduction in value of our exports. We know that the global economic situation remains uncertain and volatile, and we're also seeing competition from other beverages, spirits, beer, ready-to-drink products, and we're seeing a global downturn in wine. So tough environment. I think it's, before talking about the plan a little bit, I think it's probably worth just talking about the plan in the context of Wine Australia. We're a statutory body under the Commonwealth, and we have three main responsibilities. We manage and fund R&D, we control the exports of wine, and we promote Australian wine here and overseas. And so we don't set policy and we don't advocate. So it's a very important point that this has to be a whole of industry plan. We're in the penultimate year of our current strategy, so we'll be using this plan, this industry plan, to really inform our priorities and our strategy going forward. We have to do that as part of under legislation, under the Wine Act, in order to get the matching money that we get from the government. So just a little context in terms of Wine Australia. So where are we up to then? Well, following the vintage, I think this really started back in November last year when we had the AGW board and Wine Australia boards get together to really decide that we needed something closer in to really help us through the current situation and to get us back on track to make sure that the future profitability and sustainability of the sector. So this current plan is out to 2030. So after following vintage, we engaged ACEL Allen, who have been helping us to coordinate the consultation and also helping us pulling together the plan. And we've done quite a few numbers of workshops. We really try to be quite inclusive in terms of who we're engaging with representative industry bodies, states and regions, grower groups, growers, brand owners, government and suppliers even. So really trying to be inclusive. We're trying to balance, as anything with these things, given the urgency of the current operating environment, we're trying to balance how do we get as many people involved and having their input, but at the same time there's an urgency to really pull some new thinking together, some joined up thinking. Part of what ACEL Allen have been doing is doing some interviews, and they've also done an online survey. And to be honest, we've been using the survey as a conversation starter in the workshops. We've framed up 6 main pillars. So our people, our consumers, our customers and community, our product, our place, which is really our business, our ESG, that's really around sustainability credentials, but more broadly around environmental, social and governance, our markets and our systems. And when we go into a workshop, what we've been doing is saying, so say we're in a workshop in New South Wales, we would say, okay, well, this is what you've been telling us through the survey of your priorities, the way you're looking at things, and we've really been using that to kick off the workshops as a conversation starter. I think what I'll do in the next couple of minutes or so is just take you through some of the emerging key themes that we're seeing. I mean, I think the clear current issue, which is very important to try and resolve, is the current supply and demand imbalance. On the supply side, you know, we're looking at, and we know that some producers are trying to incentivize growers to rest their vines. We know some are putting a cap on production, but we've been talking about other ways to incentivize growers even to transition out of the sector. I think the bottom line is, how do we future-proof our supply base? How do we make sure that grape growing is profitable and has a future, because if we don't have that, we won't have a wine business going forward. On the demand side, we really need to do a reset of our national brand, and you're going to hear a little bit about that from Paul later on. But really that's about how do we reset and really re-establish the quality and the image and the value of our products, particularly here in Australia, but also in international markets. We need to, I think, continue to intensify our activities in big markets like Europe and North America, but also have an emphasis on diversification, particularly Southeast Asia. We're also doing everything we can to rebuild the relationship with China as well. I think I mentioned before, with climate change and the things we're seeing globally, we have an increased emphasis that our products are sustainable and also more broadly meet not just environmental, but also social and governance credentials. So that's a big market access issue that we're facing. And in terms of competition, we need to be, I think, innovating our products. In terms of recruitment, we need to be innovating both our products and our packaging to meet consumer demands. And I think Peter Bailey will cover, in his segment, he'll be covering some of the consumer trends that we're seeing and that we need to respond to through innovation. And the last thing is we need to not only continue to upskill our current folks in terms of maintaining talent, but we also need to be attracting new talent into the sector. And so we really want to try and make this the sector, because there's a big competition for labour, so we need to make this the sector of choice, and we need to be driving and encouraging diversity and inclusion in the sector. So just to finish up, in terms of next steps, we still have some face-to-face workshops to do. So there's still an opportunity to engage in those. We're going to keep the survey open. We're also going to be running some online workshops in September the 20th. We'll be running in the morning and the afternoon then. So feel free to join that. There's details on the website. We'd love you to be part of that if you can. We'll also continue to engage wherever possible. The hope is that by the end of the year we have an advanced draft. We'll probably still keep that open for consultation in the new year, but just to reassure you, this is not going to be a shiny brochure that just sits on the shelf. We really need, given our operating environment, we need some joined up thinking, and it needs to be an action plan that we get on and work out how to work our way around the challenges and opportunities we've got. So thank you very much.
Thanks, Martin. Some questions that have come in. Many have come in over the last week or so, but a couple I think would be great for you to maybe take on, if you don't mind. The first one that's come up quite a few times is, why is it a one sector plan when different parts of the sector have vastly different needs?
Yeah, well, that's we're hearing that a lot, because clearly we have very different businesses across the sector, don't we? Whether you're in the boutique wineries or the premium end of things, in the commercial wine. I think you've used the term, we're a continent of wine, really. So a lot of variety that we've got in terms of our people, wine styles, and our businesses. But I think what we're hearing is quite surprisingly, there's some real common threads that we need to work on together. I think the other thing is my approach is, if, to be honest, if we won't agree on everything, where we don't agree, let's lay that out and say why we don't agree. Sometimes we don't agree for very good commercial reasons, but there are some really good common themes that we're hearing from the workshop. So an opportunity to get some joined up thinking around challenges and opportunities, and really get a team approach to that.
Great. And a follow-up to that one. This has also come through a few times, and I'll take this as a quote. I'm just trying to get through to the end of the year. What good will it do to be planning further ahead than that?
Yeah, no, look, we certainly, I think you mentioned that, we certainly recognise a lot of folks are doing it tough at the moment in the sector. We've certainly heard that from grower groups that we've been talking to. So, I think business as usual needs to carry on. I think what we've also been doing is we've been using this consultation as an opportunity to get information and data out there now, so that people, because basically we want to try and give people the latest information, because a number of them are going to have quite difficult business decisions to make. Sure. But at least what we're trying to do is to get them in more informed data to make more informed decisions around what they do. But so the business as usual will continue. And as I said, this is not a set and forget plan. We really need, it's a call to action. Mm-hmm. We really need to keep going, and it's probably a plan we're going to have a rolling view as well, because the operating environment still changes quite rapidly.
Yeah.
Thanks, Paul.
No worries. Thank you, Martin. Very good. I think really important the need for Wine Australia, and I guess a key aspect of what we have done and will continue to do in the future is try and furnish the sector with the right information to be able to make informed decisions. Which feels like a reasonable segue right now. It's now my pleasure to introduce our next speaker, Sarah Campbell. Sarah joins us from Singapore, where she's the head of research for Asia Pacific for IWSR. We've asked Sarah, or briefed Sarah today, to provide some context as to what's happening globally across the alcoholic beverage sector, and in particular, the performance and impact specific to wine. Please welcome Sarah for a global market update.
So good morning, we'll try that again. So this is really to provide you some of the insight that we share with a lot of the major brand owners across the world, covering all liquor categories when we publish the database every year. Its purpose is really to give a view of the total beverage alcohol landscape globally, highlighting some of the broad trends and also its expected future trajectory. So we're going to have a look at 22 performance, move on to where we believe the category is headed, and then we'll focus on a little bit more on wine. So let's jump right in. So this is looking at total beverage alcohol globally by volume. We do exclude national spirits from this, i.e. Baijiu in China, just due to its massive scale. So if we look over from the left, we are seeing beer starting to recover towards pre-COVID levels. That's really been driven by emerging markets, so LATAM countries such as Mexico and Brazil, but also Africa. And then moving across to the right, we do see a continuation of the historical wine trends, so seeing ongoing decline from a volume perspective. Skipping across, we see spirits globally is actually now ahead of 2019 from a volume perspective, as customers have experimented a lot more during the pandemic. RTDs, I think we all know, have been a shooting star of recent years. However, we are starting to see a bit of a slowdown, and that's really been driven by hard seltzers starting to come off the boil in the USA. Cider, very much driven by the rebound of the on-trade, and that's in a couple of key markets, including South Africa and the UK. So we always look at things from both a volume and a value perspective. So this is looking at the same chart, but with a value lens. And we do see that there is value growth across the board. Obviously, there's an impact of inflation and subsequent price rises coming through, but there's also a very clear premiumization trend that we're seeing being driven by an evolving product mix. So if we focus in on wine on the left-hand side, we note that we saw a 4.6% volume decline from 21 to 22, but here we're actually seeing some value growth coming through. So looking at how categories are actually performing versus pre-pandemic, and this again is from a volume perspective, essentially really anything that's above the line is a good news story. So back to RTDs, we've seen that they've added very significant volumes and have been very resilient during the pandemic. So we've seen South Africa, Mexico, and also specifically Australia as being really key markets in driving that. Whilst beer is recovering, it's not back to 2019 levels, but is heading the right direction. When we move over to the right-hand side, focusing specifically on wine, we do see that sparkling wine generally has performed quite well, with Russia, Germany, and France being some key markets in there, but still wine has lost volumes overall. So again, looking at the same splits, but then with a value lens this time. And I think the key thing is here, we're seeing a lot more positive a picture across all categories. So we see clear evidence of value growth across beer, RTDs and cider on the left-hand side. It is worth noting for beer that a lot of that's driven by Brazil and Argentina, where there's a lot of hyperinflation. And then when we move across to the right-hand side and specifically look at wine, we're seeing a lot more positive a view, and also across still wine, where we've seen South Africa, Greece and Portugal also being key drivers there. So where are we headed? That's what we're all interested in. So this is looking at the factors that we take into consideration. I think everyone's aware is a bit of a dark art. So we're looking at the impact of inflation, the squeeze that it puts on disposable incomes. We do know from experience, having done this work for a long time, that more premium products tend to be a lot more insulated than lower priced ones. We're also factoring in the impact of cost increases on how consumers are interacting with the on-trade. In the middle, the Ukraine war, sadly not expected to end anytime soon. So obviously taking into consideration the ongoing challenge around energy and commodity prices and the impacts on shipping and tourism. And then other factors, I think we have to remember that APAC emerged from COVID at varying times, and after the rest of the world, China only fully reopened in January of this year. We've had the impact of ongoing supply chain challenges. Obviously, Shanghai is the largest port in the world, and those rolling lockdowns had ongoing consequences. And I think, as everyone in Australia will be very aware, the shifts in tourism dynamics and also the kind of resulting labour shortages that have been in hospitality. We also feed in a lot of modelled data around inflation and GDP and its impact on beverage consumption, but also consumer insight from our BevTrack longitudinal study, and that helps give us a bit of an early indication of what we think is coming down the road. So speaking of consumer insight, this comes from our BevTrack work, and this is looking at recalled spend per bottle by generation in a number of markets. So at the top we have China and India, and at the bottom we have Spain and USA. And really the general pattern that comes out of this is that the younger generation, so that's Gen Z over at the far left-hand side of every block, say that they are spending more in every market. And that really plays into this whole drinking less but better quality dynamic. So we know that the younger generations are behaving very differently to their parents and grandparents in terms of their alcohol choices. They're a lot more experimental, they want to drink different things, and this is obviously partially due to the role of social media. Very important to note here, though, this is claimed behaviour, what people say they're going to do, which doesn't always necessarily translate 100% into what they actually do in the end. So this is to kind of give a bit of a view of the impact of economic uncertainty on high-end luxury goods. The chart from the left-hand side is from Bain and Altagamma, and that shows luxury goods including jewellery, luggage, champagne, which was significantly impacted in 2020 when the pandemic hit. You can see that dip. It did bounce back quite quickly. Whereas if we look at the chart on the right-hand side, which is IWSR data for ultra-premium and above spirits and champagne, it really highlights the resilience of the alcohol category because we didn't see a dip at all. Some of you may be looking at that little dip around 2013, 2015 and wondering what that was. That was actually due to the clampdown on conspicuous consumption that happened in China, but did bounce back quite quickly. So this is looking at the global forecast out to 2027 by subcategory. So we have the historic CAGR from 2017 to 22 is the dark blue, and then 22 to 27 looking forwards is the light blue CAGR. So I won't go through every category here, but I will pick out a few key ones. I think we have been very conscious about the non-alcohol category coming through, and we do see that non-alcoholic spirits have been absolutely flying, although worth pointing out that is off quite a small base. Agave has been performing very strongly, and we're expecting to see that continue as supply challenges lessen. We're seeing a lot of celebrity-owned agave coming through. I think a lot of us will seeing that Kendall Jenner's 818 launched yesterday in Australia. So it's not just about endorsement, we're also seeing owned ones coming through. One of the key ones to point out is in the centre, so we can see that quite tall bars are RTDs and gin, so which have been kind of the golden childs of the last 4 to 5 years, and really worth pointing out that we're seeing some quite significant slowing from what there has been recently. RTDs quite driven by the USA, gin by large markets such as the UK coming off the boil, but we're also seeing that fall back significantly in Australia. Moving across to the right and looking a little bit more into wine, so we've seen other sparkling and champagne are still expected to see some upside. And importantly, as we get across to the far right, where we have still wine, we are expecting to see those declines in still wine subsiding, and we're expecting to see some good growth from Russia, China, Brazil, and South Africa as some of the key growth drivers. So we do love a Merry Mecco chart at IWSR, conscious this is quite busy to take in, but it does give a fantastic overview of where value growth is expected to come from globally. So if we focus on the far left first, which is on the global picture, unsurprisingly, we're expecting to see about 60% of value growth coming from spirits. So that's that mid-blue colour. However, we will see growth in wine across most regions, and that's the paler blue that you see at the top of the bars. Focusing in by region, APAC, we are expecting to see growth be led by spirits, but obviously wine has a very important role to play as the local consumer becomes a lot more educated and engaged. Skipping across to the right, we do see in Central and South America that beer is going to be a key driver, but again, will be very important for wine with double-digit value growth expected there. CIS, again, is going to be a key driver for wine. Obviously, quite some challenges around the political situation with Russia, though, in the coming years. And then over on the far right-hand side, we have Europe. We are actually forecasting a decline in wine value there, which will offset some of the region's performance overall. That is driven by changing consumer behaviours in markets like Italy and France in particular, where that table wine occasion is very much on the decline, but also the UK as it sees a bit of a reset. So let's focus in a little bit more on wine. So we're going to have a look specifically across still and sparkling by price band and also across a number of key markets. So this chart is looking at still wine by price band at a global level. So the dark blue, again on the left, is the CAGR from 2017 to 22. And then the pale blue is our forecast out to 2027. So if you look at the left-hand side, we see the total still wine has been declining. I don't think that's going to be of news to anyone. But from our forecasts, we are really hopeful that this kind of era of declining volumes could be coming to a close. If we then look across the various price bands, so the further right you go, the higher the price band. And essentially we see that the higher the price band, the higher the growth rate that we're expecting to see. So really highlighting that role of premiumization and again, drinking better but less in future. So this is again looking at the same chart, but specifically for sparkling wine. And I think the key thing here is to say that we're forecasting growth at all levels and even in that value sector. But again, as we move across the price bands, the higher the price band, the higher the forecasted growth. Albeit it is worth saying premiumization is expected to moderate slightly after many years of very, very strong growth. So we're going to drill down into still wine by markets a little bit more globally, looking at how they've performed from 21 to 22, and also their future forecasts, which is the orange dot. So this is obviously of particular interest, given the change in consumption patterns that we're seeing in many major wine markets, and provides some really good food for thought in terms of export strategies. So the group at the far left is where we've seen a lot of the recent growth come from, but also where quite a lot of future growth is expected. Worth noting that some of these countries may be off a kind of smaller base whenever it comes to volumes, but absolutely shouldn't be ignored. So Thailand, really not just about tourists, and I think that's a key point worth making. We're seeing a real rise in interest amongst locals, and the younger working class is showing a real interest in the category, which is viewed as being sophisticated. Moving to India, we're seeing a huge number of LDA drinkers added to the market every year. I think somebody told me it was the equivalent of adding the whole country of Belgium every year. So really worth focusing on. We're obviously seeing women being targeted as well as discernment and awareness really grows. And obviously a really key role there for Australia as it's the top imported country of origin at present. Looking then across to the Philippines, we're seeing standard and above segments, seeing increasing demand. We're seeing a real growing middle and upper class, and they're really driving knowledge and awareness of wine. Moving across, picking out just a few. So we've got Mexico, for example, where we see that per capita consumption remains quite small, but wine's actually seen as being really fashionable. So we're seeing a lot more importers coming through, and there's a real increase in tourism, which is helping to drive growth. I think Japan will have been on most people's radars for quite a long time. So we did see that 2022 growth was a bit lower than expected as the on-trade remained partially shut through to March 22. But there is good hope for future recovery, though we have to be conscious of the fact that inflation could temper growth. Another key market, Brazil. So we're seeing wine there as being really seen as increasingly sophisticated. The impact of TV, social media coming through, got a lot more adventurous consumers, and anecdotally very eager to explore new world origins that they don't know. So Australia and New Zealand really up there at the top. And then last but not least, China. We're expecting demand there to pick back up as the country reopens and the economy stabilizes. Obviously, we're all hoping for a speedy resolution of the tariff scenario. One thing worth pointing out is South Korea doesn't feature on this chart as it doesn't sit in our top 20 markets by volume. However, it has been repeatedly flagged as being a real country of interest through all of the consumer work that our sister company Wine Intelligence does. So again, looking at this, but then with a sparkling wine lens, I think we're seeing a lot of the same emerging markets show growth and show good future potential. But I guess one of the key ones here to pull out is that we do actually see growth forecasted for a number of mature markets. So that includes the Netherlands, Canada, and Australia, alongside China as it opens. Some of the key things driving this really sit around that ongoing aperitif occasion, also the role of rosé sparkling, and then potential for no and low alcohol expressions. So I don't think we can talk about the alcohol category without mentioning moderation. This looks at no and low alcohol across all categories. So dark blue is the volume for 2022 and pale blue is what we expect to be added moving forwards. From a volume perspective on the left-hand side, we can see that beer really dominates, and within that, non-alcoholic leads the way. And I think the key thing there is that it's really delivered on both consumer need and from a taste perspective. We're forecasting to see good gains across most wine categories on the right-hand side, although it is worth mentioning we're starting to see some slowing in still wine, including in Australia. I think most people would agree that there's a bit of a taste barrier that comes back in some of the consumer research, and brands are not getting the levels of repeat purchase that they'd been hoping for. So we are increasingly seeing that it looks like low alcohol could be a better option. And I think that's very much supported by the raft of mid-strength launches that we've seen coming through. So ranging from Squealing Pig at 5% ABV out to Pepperjack at 7%. We've also had McGuigan's Black Mid coming in at about 9.8%. And then when we look at our Radius Innovation Tracker, which looks globally, we're also seeing a lot of these kinds of launches coming through in North America. So we've had Woodbridge Sessions coming out at 8% ABV, and then also Casillero del Diablo at 8.5%. So that was a bit of a pit stop tour through that deck. Thank you very much for your time. If you've any questions about either the insight in the deck or any of our reports, please do send them through to the team and we'll be very happy to follow up. Thank you again, and I hope you really enjoy the rest of today's session.
Thank you very much, Sarah. It was really interesting amount of topics covered there. I think a few key takeouts that I was sort of scribbling as we were listening. Wine generally, globally, hasn't rebounded maybe as quickly as what spirits and beer have post-COVID. So clearly there's an opportunity there. IWS are forecasting a stabilisation, though, for still wine sales globally, and hopefully we can get that back into growth in the not too distant future. Gen Zs in particular, they come up in most presentations, drinking less but drinking higher priced. So I guess the opportunity there is how do we motivate those to make wine a beverage of choice. Strong and potential growing demand in a lot of the emerging markets. I think that's going to be a really important one for us all. And Nolo, or more the mid-strength maybe than the Nolo. So I think there's a bit to take out of there at a global level. Now, what I'd like to do is introduce our next speaker. Many of you would know Peter Bailey. Taking learnings from Sarah's presentation, Peter will delve more deeply into what it means for Australia, the challenges and the opportunities. On that note, please welcome Peter Bailey.
Thanks, Paul. Today I'll be discussing trends in export markets and the domestic market by price point. I'll then discuss market opportunities by the commercial and premium segments. And to finish, I'll briefly touch on some of the global trends that are influencing wine consumption across the globe. And before I start, I'd just like to say that if some of the charts are hard to see, we will be sharing these presentations later. Looking at exports over time, the volume and value of Australian wine exports have declined in the past 5 years, and this mirrors the trend in the global wine market over the same period and exacerbated by COVID and other recent global events. The decline in export volume stabilised in the past 12 months due to an increase in bulk wine shipments at relatively low prices. This is driven by the need to reduce wine stocks in Australia, which have risen to well above ideal levels, particularly for red wine. In the next two slides, I'll compare the trends in exports below and above $5 per litre, which roughly represent the commercial and premium price segments respectively. Firstly, wines priced at under $5 per litre account for about 89% of the volume of Australian wine exported, and we over-index the global wine market in this segment, which is around 85% of their volume sold in those commercial price points. Like global sales of commercial wine, exports in this segment have declined in the past 5 years. And the average price below $5 per litre, which is that orange line on the chart, has also declined in the past 3 years due to a combination of more wine being shipped in bulk, as well as a decline in the average price of bulk wine. Excluding mainland China from the figures, exports of wine priced at over $5 per litre, which is mainly premium wine, has gradually increased over time. However, the increase in premium Australian exports has not matched the growth in the global premium wine sales over this period. However, if we did include China in these figures, the growth in premium exports would be much stronger. Some of the increase in premium exports in 2021 and 22 is due to companies seeking replacement markets for China. And looking at the last year, the decline in volumes were influenced by the increased cost of living and stagnant incomes in many markets around the world. The chart also shows the average price has been on the rise, however, reflecting the global premiumisation trend, which Sarah highlighted in her presentation. This chart shows the value of exports to the major export regions, including showing mainland China separately, which is that blue line. Currently, the value of Australian exports are relatively evenly split between Asia, Europe and North America. As you can see on the chart, exports to Europe and North America have been relatively stable over the past decade. However, there was a spike to Europe during COVID and the pre-Brexit period. Most of the recent growth, however, has been to Asia, which is that purple line, and this includes growth to a number of markets in Southeast Asia, such as Thailand and Vietnam. And as many of these markets are emerging, there will be some annual volatility. Asia is where most of the world's economic growth will come from in the next 30 years, and this translates into greater purchasing power, which will in turn help fuel growth in wine consumption in the region. And Australia is well placed to take advantage of this growth, given the proximity to the region and our already strong position in many markets in that region. I'll now take a look at the domestic market. This slide shows the volume of sales in the domestic market over time, split by Australian wine and imported wine. It shows the volume of wine sales in the domestic market has declined in the past 3 years and had been relatively flat prior to COVID. Both Australian and imported wines have fallen over this period, with domestic wines hit slightly harder than imported wines. Consequently, the Australian wine share of sales has fallen slightly from 83% in 2014 to 81% in 2022. The decline in the domestic off-trade market is coming at all segments below $15 per bottle retail, and the growth in the market is actually coming between $15 to $30 per bottle. And it's important to note that new product development is driving this growth in that price segment. I'll now look at growth opportunities globally. As Sarah mentioned, global sales of commercial wines, which are less than US $10 per bottle, have been declining and are forecast by the IWSR to continue to decline in the next 5 years. In comparison, premium wine sales have been rising, but the growth has been impacted by COVID and the soaring cost of living across the globe in the past couple of years, but is forecast to grow out to 2027, albeit off a much lower base than the commercial segment and at a lower rate than the previous decade. It's important to put the two price segments in context. Commercial wines, as I mentioned, make up 85% of the total volume sold, but 60% of the value, and will remain the major segment of the market. And it's also important to note that the growth in premium wine sales has not offset the decline in commercial sales. In the past 5 years, commercial wine sales declined by 56 million cases, but premium wine sales grew by 29 million cases, roughly half the decline in commercial volumes. I'll now look at opportunities by market, firstly for the commercial segment. So this chart here might be a little bit hard to see, but what it shows is the relative opportunity by market for commercial wines. The size of the bubble reflects the size of the market, while the x-axis shows the historical value growth and the y-axis shows the forecast value growth. So the best opportunities are in the top right-hand corner of the chart, where there is both strong historical and forecast growth. For the commercial segment, most of the decline is coming in the bigger, more mature markets, such as Australia, the UK, USA and Canada, and the growth is coming from smaller European markets and more emerging markets in Asia and the Americas. Australia has generally a large share of the imported commercial wine segment in these mature markets, which are in decline. For example, Australia holds a 24% share of the imported commercial segment in the UK and a 20% share in the US. While these markets are substantial in size and will remain so, they are declining markets for commercial wine, and hence the opportunity lies in taking market share off competitors, which is a much tougher proposition in a declining market. And margins are also tight, and oversupply will add further pressure to these. So to compete at this end of the market also requires scale and low production costs. The opportunities for premium sales are greater in terms of both the overall value growth and the number and diversity of the markets that are in growth. And the biggest opportunities are in the more mature markets where those commercial sales are declining, such as the US, Canada, US, and to a lesser extent the UK, China and Japan. There are also opportunities in emerging markets in Asia and the Americas and in smaller markets in Europe. And in many of these markets, Australia's share of the premium wine sales is below its share of the commercial segment. For example, in the UK, Australia holds an 11% share, and in the US, a 9% share of the imported premium wine market. Hence, there is a significant upside in these markets for Australian wine. And while there is opportunity in most premium price points, $15 to $30 is the sweet spot in most markets in Australia. As global wine consumption is declining, driven by these moderation trends, the growth opportunity for Australian wine is to recruit new consumers to the category rather than encourage existing drinkers to drink more. This is particularly important for the younger demographic who are drinking less wine than previous generations. However, there is a large cohort of people who drink wine but have yet to discover Australian wine. Research on 7 key wine markets from Wine Intelligence showed there are almost 200 million regular wine drinkers across these markets. And of these, 100 million are aware of Australian wine, but only 42 million drink Australian wine. So this suggests that there is an untapped pool of almost 160 million people that currently drink wine, but do not currently drink Australian wine. To recruit more drinkers to the Australian category, it is critical to understand the factors that are influencing wine consumption globally. We identified a number of these trends at last year's update and all remain relevant. Given the time today, I'll only touch on just one. We will be releasing a market bulletin on this topic in the next week or so, which will cover all of these in more detail. So health and wellness is arguably the most influential trend impacting on wine consumption, and this has seen alcohol consumption fall, including for wine. Some people are abstaining from drinking wine, others are drinking less but paying more, while some are seeking no and lower alcohol options. So for the no-low category for wine, which Sarah touched on, the biggest opportunity appears to be in the mid-strength category, and that's sort of around the 7 to 9% alcohol content. And younger consumers are driving the no-low category, but wine is underrepresented and hence offers an opportunity for wine going forward. And just to finish, to assist in unlocking opportunities and recruiting new drinkers to the Australian category, it is beneficial to understand how wine drinkers, both those who drink Australian wine and those who do not, currently perceive Australian wine. It's also valuable to overlay this with how Australia and Australians are viewed on the global stage. So research from Wine Intelligence that was commissioned by Wine Australia shows that regular wine drinkers most strongly associate Australian wine as good value for money, a food-friendly wine, and trusting the authenticity of the wines. And on the other hand, Australian wine is less known for being an expensive or fine wine. And then you can overlay this with research commissioned by Austrade for the Nation brand, which showed that there are 3 areas of strength for Australia in the minds of international consumers. That's trust, a free spirit to nature, and a commitment to quality and innovation. And we can leverage these country strengths to elevate the perception of Australian wine and recruit more wine drinkers into the Australian category. And Paul will discuss how these insights have been used to inform the refreshed Australian wine brand. Thank you.
Great, thanks Pete. Insightful as always. A number of questions that we've received this morning and prior. Some key themes coming out. Clearly Southeast Asia is top of mind for many online this morning. The question here is, what market research is being done into drinking trends in this region?
To start with, we can look at our export figures, which can show what varieties and wine styles are currently being exported into the regions, which will at least give us an idea about what they're currently drinking. But we do need to have a deeper dive to understand sort of the consumer drinking habits and preferences across Southeast Asia and those individual markets. And so to help that process, we're forming, Wine Australia is forming a Consumer Insights Advisory Group, which will have members of wine companies that currently invest heavily in that sort of consumer research space. And that'll help us to understand what's currently available in terms of research, what can be shared more broadly with the sector, but also look at how we might fill any of these gaps that are identified in those markets.
Yeah, I think we all understand there are some knowledge gaps at a consumer level and what drives those motivations. So to be able to do those will be really important. Thank you. Second question, and I think it was pretty evident in the slide where we saw the China chart go like that and then drop off. And for those online, I apologise if the quality of the charts you're seeing isn't quite up to standard, given the compression going through Zoom this morning. We will make sure the slides and the presentations are recorded and available on the website. So just back to China. So have market conditions in China changed? Well, clearly. If the tariffs are lifted, what are the trends and insights we can take from that market upon re-entry?
Look, there's no doubt that COVID has impacted on the China wine market for both domestic sales and imported sales. So looking at the figures, the total still wine market is half of what it was in 2019. That said, even prior to that, imported wine sales had been declining, even though Australian wines were increasing. So that suggests that if the market does open up, we can't expect our exports to be back to the same size they were prior to exiting the market, because the market's not what it was back then. But that said, the research we've seen from the consumer side shows that Chinese consumers still rate Australian wine very highly, and we also rate China as a very important market. But it's also important to note that diversification is clearly a strategy we need to pursue going forward.
Yeah, absolutely. Fantastic. Thanks, Pete. I'm sure we'll have some more questions for you at the end of the session today. Thanks very much. Okay. Turning our attention now to market access, I would like to introduce Wine Australia's Head of ESG and Market Access, Rachel Triggs. Rachel couldn't be with us today as she's currently in Beijing, very topical given our last conversation, for the 7th high-level joint dialogue between Australia and China. However, she did pre-record her market access presentation before she left and kindly advised that any specific question for Rachel and or her team will be taken on notice and answered upon her return. Rachel, over to you.
So today I'm going to give a high-level update on some significant market access changes in the recent months in the UK, European Union, China, India, some various recent market access updates from some different jurisdictions. And I'll finish off with a reminder around the resources we've got available in this space. So if you're anything like me, the first thing you want to know out of a presentation is how many slides are there? Well, there's this slide, and then there's a slide on each of these topics. So all in all, there will be 6 slides. Starting off with the UK, so slide 1 of 6, very pleasingly on the 31st of May this year, the Australia-UK Free Trade Agreement entered into force. So that saw the elimination of the common customs tariffs, which for wine of average ABV was between 8 and 12 pence per litre, with slightly different rates for bulk and bottled wine. So the preferential tariff treatment only applies to Australian wine bottled either in Australia or the UK, so not in any other market. So hypothetically, if a wine were to be made in Australia and bottled in New Zealand or the EU, and subsequently imported to the UK, that preferential tariff treatment would not be applied. And the tariffs would need to be paid before the goods were able to be released into free circulation. Secondly, on the 1st of August this year, new duty rates were applied to wine sold in the UK, so a flat rate of £2.67 per bottle, now payable on products between 11.5% and 14.5% ABV. And duty rates proportionate to ABV concentration applied above and below that band. So prior to the UK spring budget announcement on the 15th of March 2023, the flat rate was expected to be £2.43 per bottle. And before that it was at £2.23 per bottle, so a pretty significant increase. So we've gone from a flat rate for wine of £2.23 per bottle to an anticipated rate of £2.43, and after the spring budget announcement in March with 10.1% RPI being determined, on the 1st of August we're now at £2.67 for products between 11.5% and 14.5%. So that arrangement will be in place until the 1st of February 2025, after which it's possible that alternative arrangements will be applied, and we'll be watching the associated consultation process really carefully. So the table on the screen that you see is an excerpt direct from our UK export market guide, which is freely available to exporters via our website. Those duty rates are applied at the last wholesale sale within the UK, and a reminder that the application of the alcohol duty system in markets, including the UK, is a domestic matter for the UK. So it's not something that's commingled with the tariff arrangements. The duties apply to all wine sold in the UK. Another really recent development in the UK that's a very pleasing development is the UK's Department of Environment, Food and Rural Affairs recent publication of a consultation document proposing new regulatory framework for wine within the UK. Now, that might not sound all that exciting to some of you, but let me tell you, it is one of the most exciting developments from a market access perspective in wine regulation globally, in my opinion, in recent times. So when the UK departed from the European Union, it retained the EU's wine law, which are contained in 8 separate pieces of legislation. So you practically need Google Maps to find your way around them. DEFRA's consultation indicates that there's a really strong appetite for change, and pleasingly, most of the asks that we included in the free trade agreement negotiations, such as liberalising rules relating to coupage or blending, carbonation, sweetening and enological practices, are 100% on the table. So the types of changes being worked on are the removal of prohibitions in the UK on practices such as sweetening wine with concentrate, which is currently prohibited, and similarly on blending foreign wine in market. So you currently can't send 2 different parcels of wine, like a Sauvignon Blanc and a Semillon, across and lawfully blend them in market. And also some really good movement around potentially being able to make sparkling or carbonated wine from Australian base wine in market. So that would allow Australian exporters to export bulk base wine to the UK, and then whether by Charmat carbonation, traditional method or transfer method, they would be able to convert those into sparkling wine or carbonated wine. And also some really positive signs around importer labelling and de-alkalisation. So definitely watch that space. Switching now to the EU, so this is slide 2 of 6. Laws applying from the 8th of December 2023 will require significant labelling changes for wines exported and sold to the EU. So from the 8th of December 2023, for every SKU produced on or after that date, so that being basically anything produced from 2024 vintage onwards, must have a label that discloses the nutrition declaration, the energy value and a list of ingredients. Now, producers will be able to decide to display nutrition declarations and lists of ingredients on label or off label. So that's via an electronic means, for example, a link or a QR code which appears on a product's label, provided certain conditions are met. So despite the relatively imminent commencement of these new requirements, certain aspects do remain the subject of ongoing consideration by the European Commission and are still quite unclear. So Wine Australia is actively monitoring all these recent developments and will update exporters as soon as we can when further information becomes available, and there's a heap of information already available on our website. The EU-Australia FTA negotiations are continuing, and that's been happening in parallel to the review of the existing bilateral agreement on wine between Australia and the EU, so the most recent iteration of that agreement being settled in 2008. Issues relating to the ongoing use of grape varietal terms has been a hot topic of discussion, including, of course, ongoing use of the grape varietal term Prosecco. The Australian government has a very good understanding of the importance of ensuring that Australian winemakers can have certainty over the ongoing use of these grape varietal terms, particularly in circumstances where use of the term Prosecco wasn't even contemplated back in 2008 when the wine agreement was settled, because at that point it was protected and listed as a grape variety by the EU. So we're very conscious of making sure that the same doesn't occur in relation to other grape varietals going forward. If concluded, it's likely that the tariffs on Australian wine, which are akin to those common custom tariffs in the UK, will be eliminated. Moving on to China, so slide 3 of 6. It's very well known, of course, that in June 2021, Australia commenced dispute settlement proceedings in the World Trade Organization, the WTO, and that was following the imposition of final anti-dumping duties by China on the 26th of March 2021, and that was between $116 and 218% for still wine in containers of 2 litres or less. So those duties being applied for a period of 5 years from the 26th of March 2021. We're maintaining a timeline of the dispute on our website, and whilst the import duties don't apply to bulk wine, we do know that there is a very limited amount of bulk wine entering that market, and that is due to ongoing concerns around non-tariff trade barriers and associated commercial implications. The bilateral negotiations relating to barley, which were held independently of the World Trade Organization dispute resolution process, is really positive, and that should be viewed as a proof of concept that could be used as a template for wine, and you will have seen that that's been widely publicised in the media. It's really positive that barley process delivered the intended outcomes within the agreed timeframes, and wine is a clear priority for the Australian government, who are very conscious of the high industry expectations. However, the barley and the wine disputes are very different, and in fact wine is more complex, and any agreement to attempt to resolve that dispute bilaterally, as was done with barley, that is outside the WTO process, will in and of itself require negotiations, and such negotiations are likely perhaps to be forthcoming once the findings of the interim WTO report are digested by each party, and that interim report is expected imminently, noting that we're not expecting to necessarily know when that lands, and it's not intended to be made public. If no other options present themselves, the WTO process will run to conclusion, and we will continue to advise of any significant movements in relation to that. One significant change in China since the duties were imposed occurred in early 2022, and following that, all food manufacturers, including wine production facilities, are required to self-register through the General Administration of Customs in China, so GAC, and that's as a precursor to having products imported into China. Failure to do that could result in imports to China being delayed and disrupted. So anybody looking to enter that market at any juncture should be contemplating ensuring that they self-register. So now skip to India. So under the trade agreement recently negotiated, AIECTA, tariffs on Australian wine with a cost insurance and freight CIF value over $5 US per 750ml bottle decreased upon entry into force from 150%, that's the common customs tariff, to 100%, and with a further phased reduction of 5% on the 1st of January this year. So there's 10 of those 1st of January 5% reductions to bring those down eventually to 50%. Tariffs on Australian wine with a CIF value of over $15 CIF US per bottle decreased to 75% upon entry into force, again with a further reduction on the 1st of January this year of 5%, so bringing those tariffs down to 70% now. So just to recap, the status quo on the tariffs to India, Australian wine imported to India, for products with a value of over $5 CIF US per bottle, down from 150% to 95%, and for anything that's above $15 US CIF per bottle, down from 150% to 70%. Much like the US, the taxation and the regulatory regimes per state vary significantly, and accordingly we've recently engaged an expert in market to review the state taxes, and updates to our export market guide will be made imminently. But in the meantime, there is a spreadsheet available on our website that sets out the various taxation regimes by state. Now to some very recent market access updates, particularly in California, Japan and Thailand. So in California, the Californian Beverage Container Recycling Program it's been confirmed that will be extended to wine. And all labels for products sold in California will have to include a mandatory recycling statement by the 30th of June 2025, and there's additional information on that in our US export market guide. In Thailand, some really welcome news. So after several years of engagement with the Thai Excise Department through various international fora, the Thai Excise Department's confirmed that it will accept a model APEC wine export certificate issued by Wine Australia as confirmation that Australian wine complies with Thai production standards. So that will circumvent the need for Australian wine to be tested upon import into Thailand, and should significantly cut red tape for Australian wine exporters sending wine into that market. Further good news, just last week, under the Japan-EU Free Trade Agreement, there is a raft of additives and processing aids that have recently been approved, and one of those is copper sulfate. So wine sent to Japan can now have been treated with the processing aid of copper sulfate. And on to the last slide. So this is a reminder about all the really useful resources that we have available in this space and how to best stay across this rapidly changing environment that is market access. So the first thing to be sure of, if you want to receive our updates, make sure that you have subscribed to our exporter news. Make sure that you have access to our export market guides. There are 48 of them available on our website, freely available to exporters. And be aware of guides that we have available also on the website, including our no and low wine labelling guide, our licensing and compliance guide. Remember that we have an anonymous portal through which non-compliance can be reported via Wine Watch, and that we offer a label opinion service.
That's great. Many thanks to Rachel. Clearly there was a lot to take in there, a lot to digest. So as I've said a few times already this morning, the presentations will be available on the website in the next few days for those that want to delve into some of those items that she raised in a little bit more detail. A couple of key takeouts. China, there are some added complexities in wine that there weren't there for barley, so let's just watch this space. And India, those market access guides with the duty and the tax levels are actually now have been incorporated into the India market access guides and available on the Wine Australia website. We're now going to take just a short break, around a 5-minute break, before coming back and hearing from our international leads, Laura Jewell, Aaron Ridgway and Sarah Roberts, about what's happening in market and plans for the coming year. Please feel free to continue submitting your questions so that we can answer as many as possible during the day today or through the webinar. And we'll be right back 5 minutes or so. See you soon. Welcome back. The presentations we've seen so far today have provided some context around the challenges and opportunities impacting the wine sector globally and Australia more specifically. This next session will focus on what we're seeing in market and the plans in place for the year ahead. And to kick us off in this, please welcome Laura Jewell to provide an update on the UK and Europe.
Thanks, Paul, and hello, everybody. Well, it's certainly been a challenging 12 months in the UK and Europe, but there's plenty happening in the year ahead, and we are definitely going to be defending our key markets. But rather than going through each market by market, I am going to go through our activities, and in a chronological fashion, starting with next week. So yes, there has been an obvious return to in-person tastings, but in conversations with the WSET, we know that there is still a strong demand for digital learning and creative content. So we're continuing with our virtual tastings, and the first one is with Coonawarra, the Coonawarra Vignerons, and focusing on Cabernet Sauvignon next week. We have 6 winemakers lined up, and it's been a really positive response. We have had over half of our tasting packs allocated within the first 24 hours, and all of them allocated 3 weeks out, which is the first time we've ever had that. And the quality of our attendees is great. We've got top media and fine dining sommeliers attending. And we'll be doing another one in April with the Yarra Valley Wines. Over in the Nordics, sales have been impacted in the 3 monopoly markets. Yes, they had increases in 2020 and 21, as you would expect during lockdown, and that has been followed by a bit of a downturn in 2022 as the on-trade has reopened. We have just completed a webinar presentation from the 3 monopoly buyers for our Explore Nordics campaign. They have all given us a very clear emphasis on their sustainability demands. The focus has been on packaging and sustainability demands in vineyard practices, including water usage and carbon footprint. Alternative packaging is not new in these markets. Bag-in-box has been around for a very long time and dominated those markets. But we're now seeing that extending to PET, pouches and cans. And challenging them about PET, it was quite interesting that plastic is not seen as evil in these markets as it is in some others, such as the UK and perhaps Germany, because there have been deposit return schemes for plastic and PET recycling schemes for many, many years. But they all have clear requirements for packaging, including maximum bottle weights for glass, and they are writing tenders with alternative packaging and certification in mind. And I'm afraid Australia is a bit behind the curve. Whilst the Sustainable Wine Growing Australia Trustmark is accepted, we are still slow to get them on products in the monopoly, and they will be a focus for future tenders. So our Explore Nordics webinar series of 2 webinars. The first one with the monopoly buyers, and then the second one we had a panel from the 4 markets, because we also included Denmark, looking at the on-trade, consumer trends and how to approach the market. And it was a panel of importers from those markets. So please do sign up for the Explore programme on our website, and we will be releasing those webinars at the end of September. And we've not been back to the Nordics in person since October 2019, so we decided to take a different approach this year. We focused on the 2 larger markets only. They are very high on our market attractiveness matrix, so we're going back to Denmark and Sweden. Secondly, we're working with New Zealand wine growers. We decided to join forces to attract a much wider audience, and we have a lot of the importers showing wines from both countries. It'll be the first time we've done this. The format of the day is as our usual wine roadshows, with a trade tasting, masterclass and consumer tasting. We have the monopoly buyers coming to the Sweden event from Finland and Norway, as well as the 2 Swedish monopoly buyers. And it's been really well received in the markets. We've got strong support from the wineries and importers in both cities, with over 115 wineries in each, 77 of those from Australia. And staying in Europe, our biggest campaign is our Australian pavilion at Provine. This year, as you can see, we had a new stand, we had an on-stand education area, and we delivered 11 masterclasses. We had our ever-famous barista and the even more famous Kylie, who came to visit us. Now, I cannot guarantee that she's going to be back next year, but we certainly are. So we will have more masterclass spaces, we have plenty of room, and the registration is open until October. Provine is still the leading trade fair. It is truly global, it's not just European. This year they attracted 49,000 visitors from 141 countries, including a strong rebound from Asia and a lot of US buyers. And at our pre-event tasting, we had monopoly buyers from Canada and the Nordics, we had major buyers and international importers. And it is rumoured that the infamous, famous, brilliant Gallo and Wirra Wirra deal was initiated with an introduction at Provine. We're also working with Austrade very closely to help that business development and put meetings in the diaries. And we will be using Connect to do this. As you know, Connect has been relaunched. It is free to use, and we will be putting together a dedicated events page so that we can drive trade to use and find those wineries who are attending Provine. So if you haven't got a profile on there, please do get it up there. And if you do have a profile, then please update it and make sure it's valid and relevant. Here are a few quotes from some importers at some attendees at Provine. I'm not going to read them, but I am actually going to read you another one because I think it's even more relevant. So I quote, "I've been to a number of these pre-COVID and have questioned the value on occasion. Some years have been better than others, but we keep coming back because if you don't, you can guarantee that you'll get nothing. We had lots of really positive planned meetings, but also a number of unexpected connections and walk-ups. And I reckon we'll open at least 6 new markets as a result of turning up. We know Provine is not a cheap gig, but I really do urge you to consider it. It's not just about Europe, it really is truly global." So yes, we are committed to Provine, but we have also been listening to the noise, mainly from the organisers, Vinexpo, around Vinexpo Paris. This year they had 36,000 visitors, of whom 38 were international, as we call them, i.e. non-French. And we have decided that we will take a very small booth, just tiny, showing 24 wines, and we will assess the profile of the visitors and see what response we get. So it's just a toe in the water, and it's quite challenging for us time-wise because there's an awful lot happening in January, February and March, but we will make it happen. And we're also going to be borrowing Freddie from the Austrade office in Paris to help us on the 3 days. So over in the UK, yes, it is a pretty gloomy picture. There are a lot of headwinds, including inflation still at 6.8%. The new duty rates that Rachel was talking about affect wines in particular, and wines from warmer countries even more. The wider impact is not yet known. Shelf pricing is starting to go up, and as Rachel said, it is the largest increase in 50 years. And it's a real challenge to the retailers to maintain that sweet spot of sub £8, and it's going to change the way they source wine. And this slide, courtesy of Gavin Quinney of Chateau Beauduc, shows the impact on the composition of the bottles of wine at different price points, showing how much money is actually left in that bottom segment for the quality of the wine. I think some brands, some of the bigger brands will exit that £5 to £8 price point, and we will see quite a shift in what we see on shelf going forward. And none of the big retailers are really expanding any shelf space for wine. In fact, they are making space for no and low. But there are some positive notes in the UK. The strength of the Australian brands, we are now at 25% share of the off-trade market. And talking recently to one of the big brand owners, they are seeing some real confidence coming back in the market and a huge, very strong resurgence of Chardonnay, where Australia has a 70% share. And grape varieties such as Malbec and Pinot Grigio are growing. The other success recently is the number of new exporters to the UK. We've seen some success stories following our presence at the London Wine Fair in 2022, where at least 6 wineries were picked up, including 4 by an importer who has never previously done Australia before. He's always focused on South Africa, and that shipment is landing in the next couple of weeks. So yes, it takes quite a long while, but it is definitely worth it. And following the ATT in 2023, where we offered the opportunity to have wines on our Freeport area seeking distribution, one importer shipped 3 wineries from that area. So next year we will be back at Lindley Hall for our Australia Trade Tasting, and registration is already open on the website for wineries and importers. And we will also continue to offer the opportunity to send 2 wines for that Freeport area for new to market. And we're back to Edinburgh after 4 years, where we will also offer consumer tastings and masterclasses in conjunction with some of the regions. One of the highlights of the year is the launch of Matthew Jukes' 100 Best Australian Wines. And I'm very happy to report that after the launch back in November at the Australian High Commission, sponsored by us, Matthew went on to showcase his wines, all of those wines, at 15 events in a huge roadshow, which attracted over 2,700 attendees, so very well worth it. And the next event is at the end of this month, so also sponsored by us. Education is key to what we do. It allows us to get to a very wide audience, from sommeliers to WSET and MW students to retailer and importer sales staff. This year we've expanded to some new areas. We worked with the Embassy in Croatia to do a virtual tasting. Emma Symington has hosted webinars for the WSET. They usually attract at least 1,000 views live, and if you check up on YouTube, some of them have clocked up over 5,000 views. We've done virtual tastings in Poland, in-person ones in Dublin, Glasgow and Edinburgh. She's worked with retailer sales advisors such as Waitrose and Virgin. And we have a very talented team in our education. They are the guys at the front line spreading the word, and many, many people around the world have fallen in love with Australian wine listening to Mark, Catty and Emma. And we ended the final year by sponsoring the final lunch and tasting at the IMW Symposium in Wiesbaden. We showed 35 wines from 16 regions, all chosen by Australian MWs. And to close the event, David Ridgway, the Agent General for South Australia based in London, Emma Symington and I announced Adelaide as the host city for 2026. Sponsored by the South Australian Government and supported by Wine Australia, we will be welcoming approximately 500 MWs, students, top wine media and influencers for 4 days in November 26. So please put the date in the diary. So to conclude, yes, it's been a challenging year, but the year ahead is full of activities, and I thank you for your support in anticipation.
That's great. Many thanks, Laura. It's amazing how much is happening. And when we first started talking about partnering with the New Zealand wine growers in Scandinavia, I thought, where is this going? But I think it's actually a great example of thinking outside the square, taking something to market that's complementary, not as a competitive, but as a compare and contrast opportunity. And actually really bringing that spirit of Australia and New Zealand to life on the other side of the world. So I think it's a great initiative.
Thank you.
I'd also like just to reinforce Laura's comments earlier on Provine. For those that were there last year would realise just how big that event is. And we talk a lot about Asia. We will talk a lot about Asia more this morning, what's happening in North America. And sometimes I think Europe tends to be the poor cousin. That show is a global show, and I think it is well worth the investment, if possible, to be able to support it if you can. So please, if you can, sign up. So Laura, a couple of questions that have come in while you were talking. One I think Rachel touched on earlier as well, just around nutrition labelling. So in your view, how will the changes in that space in the EU affect our collective ability to sell wine within the European Union?
It's certainly a challenge, but we have been talking about it for quite a long time, so it shouldn't be new news. And there are options to be able to put the nutrition labelling off-label for the most part. And it's not just an Australian or even New World thing, it applies to everybody. So it's a level playing field for everyone. Everybody has the same challenges. And to be fair, I think a lot of other countries will start to look at it. I know that the UK is already talking about it as a possibility. So if you can get it right first time, you'll be ahead of the curve and able to sell wines in more markets that will be demanding it.
Okay, thank you. And a follow-up to that, the opportunities both in the UK and across broader Europe for no and low alcohol wines. I think you made reference to the fact there is opportunities there. What are you seeing?
Well, certainly we're seeing the big retailers putting space aside and promoting it really quite dramatically. But it's more for spirits and beers at the moment, although they are making space for wine. And I think that will continue as more products are brought onto the market. Good news is that Australia seems to be dominating in that no and low category. I think where there are also opportunities are in that mid level, which Sarah talked about earlier, with, again, some of the big brands doing that mid level of alcohol. And certainly it's being driven mainly by the retailers in response to consumer request for no and low. And we're seeing that reflected across Europe. So it's mainly the big retailers at the moment.
I mean, I think Sarah's touched on earlier, as did Pete, that there is certainly opportunity in the space, and what we're seeing with the moderation and some of those other global trends. I think the question now is where we can get the quality of our wines to the same level as what beer and spirits have been able to do over the last couple of years, and there's a lot of work going on in enabling that to happen at the moment.
Absolutely.
I appreciate your update. Thank you, Laura.
Thank you.
Okay. We're going to move across the Atlantic now, and I'd like to welcome Aaron Ridgway to provide his insight and update on the Americas. Welcome, Aaron.
Thank you, Paul. Hi, everybody, and thanks for following along today. And I'm really excited to give you an update on all things Americas. I will start with the US, move into Canada, and even talk a little bit about Brazil, which I don't believe I've done in any previous presentations. So for the US, I would like to characterize the last year as a year of surprises. Consolidation between distributors and importers was quite slow. But many of you have seen that Gallo has purchased no less than 3 wineries in the last few months. And we'll talk a little bit about Gallo today, as they're really leading the charge in terms of acquisitions and investing almost exclusively in businesses that are super premium and luxury focused. Spirits have been the darling of the US alcohol market for the last several years. If you remove tequila from the overall numbers, spirits are down. And certainly certain segments such as Cointreau that align to growth in luxury and also align to that general growth in the last few years are also facing some challenges. Even Jack Daniel's, which for years has been the kind of heroic spirit SKU in the US, is actually in decline. Beer has had probably the most surprising year. The resilience of the market leader Bud Light was tested initially very simply, but very controversially, by a marketing strategy that we all know quite well has backfired. The number 1 beer brand is now Modelo Especial, which many people predicted would eventually become the most popular beer brand in the US, mostly driven by changing demographics. 19% of the United States population is Hispanic, but that population drinks 22% of the beer. So again, that trend was probably accelerated more than purely brought to life through the challenges faced by Bud Light. Wine in particular, 8 of the top 10 brands declined, and after calendar year 2022, when we saw the end of the year, wine finishing about 3.2% down, wine is predicted to finish 2023 ever so slightly up, around 0.1%, but very much driven by the premium brands, $15 and above. I've included some data there that applies to brands $10 and above. The one I just really want to highlight on that chart is Josh Cellars. That is quadrupled in depletions in just the last 4 years, with an average scan rate that sits just above $15. So what that brand has been able to do in the recent past is, I think, proof of, or certainly evidence that supports, premiumization propping up the general wine category in the coming years. So in that year of surprises, I think there's also been some fantastic highlights. As we've seen, with Gallo partnering with Wira Wira, they have stepped into the Australian category in a strategic way, which is fantastic. I think not just for Wira Wira, but Australia generally, and sends a really powerful signal around premium plus and luxury price points. Southern Glaciers, actually through their specialty importing division Artisanal, picked up a number of brands from the market entry program, and they're doing a bit of a trial to see if, even though they're a wholesaler with about 30% of the market, and that's their focus, through some of their specialty importing divisions, they're doing a bit of a test to see what they could do with the Australian category in fairly small ways initially, but if there's growth and interest in those brands, they may expand them out into, some of their more significant wholesaling divisions. The market entry program ended its fiscal year at the end of June. I'm pleased to report on value growth for MEP, and I'll touch on that more a little bit later. As Paul mentioned, as Peter Bailey mentioned during his fantastic presentation, $15 to $30 is a really key area of growth, not just for the wine business, but we are seeing some really strong growth and resilience in Australian wine. A lot of it is driven by Cabernet Sauvignon, but there's some growth for other varieties and styles in that segment as well. Just touching on Wine Australia activities, we managed to show over 500 wines in our activities in the last 12 months, whether that's through our sponsorship of Texom. You can see Mark Davidson there, extremely busy. In our education events, in some of the retailer and distributor programming, as well as a range of activities across Canada that I'll touch on in a little bit more detail. Speaking of Canada, we have, after many years of trying, been able to negotiate with the SAQ and the LCBO to send their category management teams on inbound visits to Australia. We will welcome the SAQ in the first couple of weeks of November, and the LCBO are willing to brave an Australian summer and come down in early January. So that's been the product of a long set of discussions, and I'll tell you a little bit more about that on a future slide. And we did, top right corner, dip our toe in the water in Brazil. We supported an activity that was intended to pair importers and direct buy retailers with, just about a dozen Australian brands who were looking for representation in Brazil. Demographically, as Sarah mentioned, the numbers for Brazil are quite good, and in terms of Australian exports, they're also showing some growth. I wish I could devote my entire presentation to media, because we are seeing some incredible both journalism and wine scoring results across publications in the US and Canada. The days of having to feel apologetic when you walk in to meet with a distributor or a retailer are gone. We now have an incredibly strong body of work that supports all of our key messaging: value for money, contemporary wines, innovation, durability, old vines. All of that storytelling is absolutely alive and well, and it's not just Wine Australia saying it, it's actually reflected all across a variety of publications. Really a step change. I think we've looked at this over the last 18 months. The appointment of Erin Larkin at Wine Advocate has been an amazing way to increase the coverage in that publication, which still carries a lot of influence despite the retirement of Robert Parker. And you can see the work that Angus is doing, James Suckling is doing with the appointment of Ned Goodwin. And as I said, I could talk about media for a long time. In the presentation that you'll see, these articles can be clicked upon, and please reach out to Deirdre Cook, our marketing manager for Americas, if you'd like some specific coverage that supports your messaging and your activities in the US. Retail programs, these form a really key part of what we do. These programs support commercial and premium wine. If you look at customers like Kroger, H-E-B and Binny's, they are very much invested in commercial Australian wine and starting to expand their understanding of premium, super premium and luxury, but that base is quite small. We ran a thematic with H-E-B in January and February of this year that led to an increase in the average bottle price of 270%. That's great. I think we'll take those percentage increases as often as they're offered to us. An H-E-B buyer participated in a Wine Victoria supported inbound that happened in June. And we're just trying to engage that customer as much as we can moving forward. They were voted the top grocery outlet in the US, and they're a growing business and a very influential business just focused on the state of Texas. But what we want to try and do is leverage the success of that thematic to get them looking at other storytelling and a different mix of products on their Australian shelves. Binny's, I can only report on incomplete campaign performance because actually that program is running right now. We had a great activation in the month of summer. That was a repeat of a program we did last year, which had a barbecue food truck and a walk around wine and food pairing education event, as well as lots of POS in store, lots of staff education and some displays. You can see there some of those early results are really positive. And Kroger. Now, we didn't have any input over new items, well, at any of these outlets, but particularly with Kroger. It is the nation's largest grocery chain. It is currently part of an antitrust investigation phase because Kroger is trying to merge with Safeway Albertsons. We'll keep you updated on the progress of those discussions. But certainly Kroger initially, wanted to, more or less focus on some specific brands within its assortment. With the support, both financial and operational, of Wine Australia, we were able to develop some new collateral and make those 160 demos category focused. So 3 brands were brought together with some really exciting and contemporary storytelling. So it wasn't just, brand in, brand out, as we often see in those large grocers. And you can see there as well that, being customer oriented, we're trying to be as receptive as we possibly can to the parameters that these large customers have for working relationships, which, as we would expect, are very strict. Moving up to Canada now, we have a range of activities you see on the right-hand side. Those are, fabulous executions there that really combine commercial and premium in terms of the types of products that are offered through those UPAs. We're really targeting SAQ and LCBO primarily. There's been a little bit of a frustrating absence of a full-time category manager in British Columbia, as well as some headwinds in the regulatory environment that have meant we've kind of rotated that market down to a slightly lower priority. But we're continuing to support thematics as well as education across those major provinces. The new to market activities have delivered a lot of connections for businesses, and certainly there have been a lot of wineries picked up through agents through those activities. Just jumping down to the bottom where you see that term Canada Roadshow, we are scoping a return to a more substantial face-to-face activity that spans several provinces in Canada. The news on that will be coming down the pipe. We haven't decided on the timing. We did get a great response from our global marketing survey that suggests that a lot of businesses would like to potentially invest in an activity that returns to Canada in a major way. And we're really working on being able to include new to market as well as existing. Really, the big news around Canada is, yes, combined with a resumption in a partial resumption in our international visits program after a considerable absence, and also off the back of a couple of years of negotiating with the liquor boards, we are bringing them to Australia. You see that they're visiting an exciting number of states and regions there for both. The focus is a little bit different for these visits. With the SAQ, we're really moving to the general list and continuous availability wines because we've seen a bit of a transformation in the specialty and higher price point wines that they've been able to trade, and they're seeing some really good growth. We're earlier along that journey. There's Stephen Weinert's favourite word, journey. We're earlier in that engagement evolution with the LCBO because their assortment still looks quite similar to what it has for the last 8 or 10 years. And we really want to focus on step changing their understanding of how Australian wine has evolved and more or less metamorphosed over the last few years, and they're going to be doing some really exciting engagement around some emerging regions and styles, as well as some deep engagement with regions and producers that they have been supporting over a long period. Mostly this is to include in the presentation that we emailed out afterwards, but a nice detailed calendar of our activities in Canada for the next year. And I'd just like to finish today with acknowledging the US Market Entry Program. Obviously, it's a major win for our program and for the category generally that, Gallo has selected a program member, Wira Wira, to partner with at a large level. Really, the theme of this slide is fewer but bigger. So not as many wineries achieved an outcome in FY23, but you see a 25% increase in the average order value. I really want to stress here that the comps over 2022 were tough for the market entry program specifically. A lot of that club business, the direct buy business with customers like Wine Library, first bottle, last bottle, that were really trading, to service customers who were still behaving like pandemic customers and wanting to buy through e-com. We saw a more than 50% reduction in that business in FY23. And I should have said at the start that for comping purposes, a lot of companies, whether they're suppliers, distributors, importers, restaurants, are much more now attuned to comping over 2019 versus 2022, just because of those persistent, dynamics in the system where shipments are outpacing depletions, and a lot of customers are reporting that slowdown in calendar year 23. So an exciting cohort of 48 wineries in the market entry program for FY24. We will be reporting on values and outcomes for that program throughout the year, but I think that's my 10 minutes. So thank you very much for tuning in, and I will leave it there.
Many thanks, Aaron. Do you want to just come in a little bit? I'm not that scary.
I do.
Questions that have come in. It's touched on already a couple of times already today, but this the Gallo deal with Wira. Does this deal, do you think, open inroads for further deals with other distributors and other wineries in the US market?
It's a good question. We're getting that question a lot. Look, we believe so. Many months prior to, Gallo and Wira Wira specifically talking about a partnership, we were engaging with Gallo at a category level and helping them understand, from a variety of different angles, what the opportunity for Australia could be. Mm-hmm. We have incredible price competitiveness through FX, as well as a great offering. What Wine Australia will be looking to do with the Gallo piece specifically is taking that story and seeing if we can present it to Gallo's peer group, which is Constellation, the wine group, Delicato, Trinchero, and some others, and really helping them understand, how they can exploit the Australia opportunity at a time where, COGS are rising for domestic and imported wines. Inflation is still sitting at about 5%. It's really about driving the value and attractiveness of Australia. Mm-hmm. So we've achieved a win with Gallo, but yes, absolutely, we'd like to drive that messaging to other businesses.
Yeah, cool. It's not something we've touched a lot today, but currency is certainly working in our favour at the moment.
Enormously.
Second question, what's being done to strengthen Australia's position in the premium market in the US?
Good question. So some of that is being done by businesses like Gallo, who are investing in those premium price points for Australia, as well as we've seen them by Rombauer, Massican and Hahn in the Monterey Peninsula. Look, in terms of Wine Australia specifically investing in premium, I think through a lot of our education activities, we present premium wines because of their fitness for audience and our ability to tell regional stories and, really sort of appellation correct stories. But look, Paul, it's a good question, and I do get asked this a lot. I think our activities really show a lot of support for commercial and for premium. That slide where you saw H-E-B, Binny's and Kroger all clustered together. The majority of products featured in those programs are actually commercial, but what we use in that context is, premium storytelling and data to try to encourage those customers to create some room on shelf for higher price points. Mm-hmm. You see in the domestic category with brands like Josh, New Zealand brands like Whitehaven and even Prosecco brands like La Marca, those are very much premium products that have grown out of, some more commercially dominated price segments. So yeah, that's one way that we're, kind of trying to insert premium into commercial environments to help some of those customers migrate their pricing up.
Yeah, it's an interesting one. I think we often talk about it in a sense that they're mutually exclusive, and I think we've got to get better than that. We can walk and chew gum at the same time.
Exactly.
All right. Thank you, Aaron.
No worries.
Just to pick up on a couple of other points that Aaron made, particularly around Canada and the visits with the LCBO and SAQ. As he mentioned, they are quite prescriptive in what they want to see when they're here. So it does allow us maybe not the same level of flexibility. But through Australian Grape and Wine, we've also managed, or Australian Grape and Wine has managed, to source some funding that will support the reintroduction of a visitation program through 2023-2024. It'll be modest to start, but it is something that we're working on now, and we'll have more to share on that in the coming weeks. Okay, moving a little bit closer to home. There continues to be lots of interest in the opportunities across Asia-Pacific region, with Asia and in particular Southeast Asia and India presenting growing opportunities. I'm happy to welcome Sarah Roberts to provide more detail on what these might look like and plans for the year ahead. Thanks, Sarah.
Pardon me. Thanks, Paul, and welcome to everybody online today. So to start with, I'm going to have a look at where we are now and some sort of key observations we're seeing across the region. Then I'll take a look at where we're going, our approach to our focus markets, and then lastly, how we're going to get there, and look at some specific activities that will be open for you to register for. So to start with, a few key observations across the region as a whole. So I think Sarah mentioned this in her presentation earlier today, but we really are only just having the first full year of normal operations across the region since COVID restrictions eased. And we're not quite there yet. There's a couple of markets that opened up later in the year last year, so namely Japan, Taiwan and Hong Kong. So it's important to note it's still early days and things are still stabilising. Illustrating this further, we can see volatility in the export figures. They are going up and down quarterly at the moment. So it's important to take a step back and look at the trends over time than at a single point. And if we do this, we can see this opportunity in Southeast Asia really clearly, particularly if we look at the markets as a whole. They remain in growth for the most part, and as Pete pointed out, projections are promising. North Asia has been a little bit different, some mixed results up there. Japan, South Korea and Taiwan are all down, but Hong Kong has jumped a lot over the previous 12 months, and this is likely due to some changes in the export hubs across the region. So despite this volatility, where most of the markets have come out of the COVID period stronger than they went in, and exports are still following steady trends in the positive direction. So we can still see opportunities there for anyone willing to commit to the region. So I'll quickly make mention of a couple of other things to note across the region. It seems that economic pressures are particularly being felt in the north part of Asia. Across the whole region, we're seeing trends towards lighter styles, whites and sparkling wines, so that's an important one to note. Last year we were sort of talking about moving to e-commerce, and this became a bit of a one-size-fits-all scenario across the region. Everyone was forced online during COVID. Things are changing, and there are some markets that have really embraced the online and e-commerce channel, and others like Japan, where we're seeing evidence that things might be moving back towards bricks and mortar stores. Tourism still hasn't completely returned across the region, which is important for markets where consumption is sort of tied to tourism. That's particularly relevant in parts of Southeast Asia. And we still enjoy some strong brand associations in Southeast Asia around the brand Australia, so another one that we can leverage. Last point to note, we've got 2 country managers well underway now in Japan and Korea, Rose and Susie, so they've completed a series of activities already and have a strong pipeline of work coming up over the next 12 months. And we have new resource as well in Vietnam, which is largely thanks to Auscham up there and their new AusHub initiative. So Jennifer is someone you'll probably all come across at some point. She's our wine specialist there now, and we'll be delivering a series of activations across the region over the next few years. So with that context in mind, where are we going? So we have 2 main objectives in the region, and it's largely dependent on the maturity of the market. So we're either going to be looking at increasing our market share or increasing consumption. So starting with North Asia, and particularly Japan and Korea, because we have the resource there. These both are well-established markets, but our share is quite small. So starting with Japan, we really need to start competing at a higher price points in this market. So Rose has been working hard to reposition Australian wine and really improve perceptions of quality and ensure it's seen as a reliable choice and a trustworthy choice as well. According to Wine Intelligence, these quality perceptions are increasing, so it's heading in the right direction. We just need to maintain the momentum. Supporting this repositioning work she's doing, Rose has developed some localised messaging. The intention here is to establish an emotional connection between that welcoming Australian character and take the difficulty out of choice in building confidence that if it's an Australian wine, it's going to be exactly what the consumer's looking for. This key messaging is being rolled out across all of our activity now, and you'll start to see it in the market moving forward as well. And then to further build these associations with Australian wine around quality and good value at all price points, we're working with in-market partners to execute a lot of collaborative activations and brand alignments. Rose has laid some foundations with partners like Vogue and Tourism Australia, and will be continuing to align with similar partners moving forward. Staying in Korea, in North Asia, we've identified that there's a gap in awareness of Australian wine around quality and diversity of what we produce. So for Susie, in this market, education has been a vital tool to lay foundations for future activity. Through the work she's done so far, she's really identified a real appetite for knowledge amongst trade, and as knowledge grows, confidence in engaging with Australian wine builds as well. She's also been focusing on growing the Australian wine community in Korea, and that's really around winning new trade advocates who can in turn influence their peers and also consumers. And this community just amplifies the work that she's doing in the market. So with this solid education base now in place, we're focused on trade-facing sales activity, and this is largely in support of importers who really need to sell through stock during this difficult period. And then moving into next year, we'll expand this to include consumer-facing sales activity as well. So moving on to Southeast Asia, we already enjoy a strong market share in these markets, so the main opportunity here is growing the category. They're not naturally wine consuming countries either, so we really need to encourage a behavioural change and give consumers compelling reasons to shift to wine. To make it easier to adopt, we're looking at ways we can tie Australian wine into lifestyle and those really familiar drinking occasions, which make sure that wine, and Australian wine in particular, is not intimidating, but rather desirable and approachable. So we're planning to develop a series of localised sales tools and materials to really promote this connection to these local cues and support the sales teams in market selling wine. There's also an opportunity here to leverage Brand Australia. We've got some strong brand associations, which I spoke about earlier. We just need to look at ways we can link those back to wine. And I think Paul will talk a bit more about the brand work we're doing next. And lastly, we're just using trial and education opportunities to generate exposure for those new styles and varieties that we're seeing an interest in. So we'll support sales through masterclasses, staff trainings and product showcases. I'll just make mention of India as well. It's obviously a market of great interest for a lot of people. The opportunity is clearly here in this market, but it is going to take time and it is going to take a bit of investment to realise. It's going to be a longer burn, but the size of the opportunity is potentially quite significant. And I've got a few stats, thanks to Rachel, that I will use to just illustrate what this could look like. There's 485 million consumers above drinking age in India at the moment. 1 million people turn 18 per month. Most consumption is in urban areas, and there's four key areas of Mumbai, Delhi, Bangalore and Pune. And together these account for close to 85% of total wine consumption. So we've got resource pressures at the moment, which means that we are taking a step back here and supporting Austrade in taking the lead in this region. We're working really closely with them on a number of activations, and Pro Wine Mumbai will be the next big one to take place there. If you are looking to engage with the market, there's a lot to get your head around. So I would highly recommend you watch the Market Ready India webinar series that we have on our website. It really unpacks everything you need to know and it will set you up to achieve success in that market. So how are we doing it? So I mentioned pressures on resource earlier, which mean we have to work smarter, and so collaboration really is key for us in this region. We're continuing to consolidate our relationship with Austrade and really align our planning so that we're working hand in glove across the region. There'll be a number of markets that will take the lead, and they're markets which we have resourced largely, and then others where we'll support Austrade's team with them taking the lead. We're also part of what is known as the collaboration group. So this is the big 5 RDCs who secured some funding for collaborative activities in Asia. And these are really to position Australia as a premium producer of choice. So work is now complete in Thailand and South Korea, and we've got activity in Vietnam coming up in 2 weeks' time, followed by Indonesia in the first half of 2024. Then we have a calendar of activities, and you can see some of them on the screen now. And some of them are open for participation, so I won't go through them all. I'll just call out the ones to keep an eye out for. The first one is the Grand Tasting in Seoul. So that one is happening on the 23rd of November. It's open now, so if you're interested in participating, speak to your importer and then jump online and register. That's going to close in the next couple of days, so get onto that one quickly. Vinexpo Asia Pacific is one that I need to call out too. So that was the first one back in the region this year since 2018 in Singapore. It's now going to be an annual event alternating between Hong Kong and Singapore. So the next one will be May next year in Hong Kong. We will be opening expressions of interest for that one fairly soon as well. The Southeast Asia Roadshow, so this is one we're scoping currently, but it will be a collaborative activity with Austrade and will likely consist of capability building activities in market promotions and education, and then culminating in trade shows in each market. And then lastly, the Osaka Trade Tasting. This one will be in the first half of next year. Austrade will lead on this one, but it is one that will open for participation, and we'll certainly let you know when that happens. And just a few last thoughts to leave you with. So the opportunity is definitely there in the region, and we do have momentum. So it is a great time to be engaging with the region, just bearing in mind the global pressures are being felt there as well. Be strategic. You don't have to be everywhere. So just focus on the markets that fit your brand, the commitment you can make, and just be aware of what the consumer trends are and make sure you can fulfill on those. Differentiate yourself. So there's a lot of competition in the region, and just make sure you're sort of clear on what sets you apart. And visit the region if you can. It's changing a lot and changing quickly, so there's no better way to really get your head around what things are currently like than going and visiting for yourself. Lastly, just wanted to make a point of saying that if you do have an importer, just make sure you're actively engaging with them at the moment. Things are tough, and shifting stock is a little bit of a challenge. So ask them what they need from you to help with the sales and really support them wherever you can. As always, more information is available on our website. Sign up to our newsletters if you want them straight to your inbox, and then contact us at any time. The team is always here to help.
Thanks, Sarah. Lots of questions around this region. Clearly, lots of opportunity as well. So we might just jump straight in. You said there that things are going well, starting to see these green shoots, as it often gets referred to. So the question is, can we trust that these green shoots will bear fruit? And are the opportunities great enough when I need results now?
Look, I can't guarantee results, but I think, the opportunity is strong. And if you are committed to, putting the time and effort in, then you can absolutely see results. I think it's important to note that this region in particular, success is really built on relationships, and taking the time to build those relationships is really important to secure importers and to secure sales opportunities, which means it's not likely to happen immediately. But I think it's definitely worth putting the time and effort in and chasing the opportunity.
Chasing the opportunity indeed. Okay, talking about opportunity, this one's more specific to India. So what work is being done to expand our reach in India? Is the wine market growing there enough for us to be looking at any shift in focus there?
So as I said, Austrade are taking the lead in that market, and they've been quite active in promoting Australian wine and growing sort of knowledge in the wine space. They've done a lot of social media campaigns and education activity, and then we'll be executing Pro Wine with them later this year. I think whilst the opportunity potentially is big in India, it's important to be realistic about this market. It comes with a lot of challenges. We're working off a really low base. Familiarity with wine is quite low as well. So it takes it's going to take a lot of work. And yeah, absolutely do your research before you decide to commit to that market. But yeah, again, the opportunity is there if you're ready to go after it.
I think one of the questions that's actually just popped up online just now is given or some of the focus, the attention on Southeast Asia as a region, is that now sort of moving our focus from what was the hot market, in inverted commas, of the US a couple of years ago? And I guess maybe that's a question I can take now. And I think the answer is definitely no. The US still is a massive market for Australian wine, both at commercial and premium. I think Aaron's already talked about that this morning. Southeast Asia is another massive opportunity for Australian wine. Again, part of that diversification strategy we keep talking about is being able to spread risk across multiple markets. So we want to keep building, we want to keep investing in the US or in North America. We still want to keep investing and maintaining what we've got, protecting what we've got in Europe, growing where there's opportunities available. But clearly, if there's a big opportunity for our wines where we have a geographic benefit as well, in route to market, then we would be silly not to put a lot of effort and investment into trying to unlock that for the sector. So I hope that answered the question online. And Sarah, thank you for your time.
Thank you.
Okay, so to round out today's update presentations, I'd just like to take a few minutes, if I can, to talk about the evolution of Australia's national brand and how we believe it could benefit wine. I'm sure most online, if not all, would know all of the brands on the left-hand side of your screen. Nike, Apple, Coke reportedly spend billions every year managing their brands. Harley-Davidson spend a far more modest 100 million or so, at least according to Google. But they have something in common, and that is that they have managed to evolve and adapt to remain relevant to their target markets. That's ultimately the measure of success. The opportunity for wine is slightly different. Wine, for the most part, remains an agricultural commodity in most parts of the world. Relatively low cost of entry, certainly compared to the brands we've just been talking about. And there is a proliferation of brands, or I should say labels, globally. Wine, we also know from the presentations that Sarah gave us earlier and that Peter's touched on, has lost appeal amongst younger drinkers, both millennials and Gen Z. And we see that probably from 2010 to today. Wine Intelligence have got a report, or have been reporting on that for some time. So I guess the question from a wine perspective is, how do we actually go about trying to cut through? How do we make wine relevant? And more importantly, how do we make Australian wine relevant? The challenges we see is that we need to squeeze more out of what makes Australia and Australian wine unique. We need to try and define a clear and concise positioning for Australian wine, which resonates with the local industry, and we have had lots of feedback on that. If we don't all believe in it, then it's going to be very difficult for others to believe in it. So what resonates with our local industry, but also more importantly, how do we translate that effectively across our global markets? And as you'll see on the left-hand side, and I apologise if the slides are a little bit blurry for those online, we can't compete on investment, so we must be smarter, more agile and more creative. The opportunity as we see it is to build a stronger trade and consumer connection globally for Australian wine, to energise the industry with a clear, relevant and unifying brand message that can be leveraged across all markets, whether they be mature or emerging. We need to present diversity, length and breadth. We need to present the big and the small, the traditional and the contemporary. We need to present the vast story of Australia, and we need to tailor the message to the markets and leverage Team Australia. We also need to provide the entry for new customers and consumers to discover the regional and brand stories that provide the depth and the adventure to motivate and recruit new drinkers to the Australian offering. We also need to work on what we know we've already got strengths in, not necessarily from a wine-specific point of view, but from an Australian national point of view. How we act, how we speak, what people in international markets, or many people in international markets, think of Australia and Australians. There are some clear guidelines that have come out of the research that Austrade had commissioned for the Nation Brand piece of work. And while not all of them are relevant to wine, there are certain ones that we think are absolutely relevant and things that we want to try and leverage further and build on to build the capability and capacity of taking the Australian wine message to the world. What does that look like? Our wine truth. Every bottle of Australian wine is an invite to taste the wonders of Australia. Our unique combination of modern thinking and ancient lands produce wines that are diverse and as unique as our country, from earthy to elegant, lean to lush. Our vast distances, diverse and rugged landscapes and abundance of rich natural wonders make us, and in turn our wines, adventurous by nature. Now, this idea of adventurous and trusted comes out really strongly in the research. It's what many consumers around the world think of this exotic place, sometimes on the other side of the world, where not really sure too much about it, but it's got this element of intrigue, this element of excitement. So the premise of adventure is it's inclusive and adaptable to suit big and small, all price points, traditional and contemporary. It talks to people and place, allows for an emotional connection as opposed to a product-based one that taps into a wider insight around Australia and Australians. It also provides an opportunity for us to try and leverage a Team Australia approach to how we take and invest and amplify the positioning worldwide. Bringing it to life is clearly the challenge and also the opportunity. And what we've tried to do is break it down into three key areas. This first revolves around modern thinking. It's about how we act, what we do. It's about being welcoming in our nature. It's about being free-spirited in our thinking. And it's also being conscious in our decisions and actions, acknowledging the living custodianship of our First Nations people while recognising the scientific contribution of our European trailblazers. This modern thinking is then juxtaposed with something very unique to Australia, and this idea of ancient lands. Ancient lands full of natural wonders that nurture diversity, but also enable sustainability. And the third piece of the puzzle is the end product. Wines that deliver on their promise, wherever they may sit, wherever they may come from, whatever price point they may be. It's ultimately about building trust. And we've worked through a lot of the research from where we've come from a wine perspective, and also overlaid with what we've seen from the Nation Brand piece of work to come up with proof points that we think allow us to tune messaging for different markets, segments and consumers. In no particular order, these include diversity from our continent of wine. I won't read these slides. I'm sure you can read them quicker than I can talk through them. But diversity clearly is key. Acknowledgement of what has gone before us. And what is still to come. And clearly we haven't gone and delved a lot into ESG and broader sustainability today, but it certainly will be a significant part of the plan when the One Sector Plan is coming up for consultation later in the year. It's about our spirit. We're respectful but playful. Precursor to innovation. It's also about our sector being adventurous, our desire to mix modern thinking with the world's most ancient lands. It's about how we deliver it, with genuine warmth behind everything we do. And finally, it culminates in trust, and that's a trust that's built over time. So there are our proof points. But how do we put that into a package that resonates hopefully with markets, with consumers, and allows us to also recruit new drinkers into our category. Our view is it's about being, or resetting, as I think Martin said earlier, this idea of we are open, Australia is open for adventure. So what is open for adventure? What's our elevator pitch? Well, in every bottle of Australian wine, you'll taste the wonders of Australia. A reminder of the adventure and diversity that defines our culture and our land, the unmistakable hallmark of Australia, and more importantly, Australian wine. The premise of Open for Adventure is that it is inclusive and adaptable to suit big and small, all price points, traditional and contemporary. It allows us to talk to people and place, allows for an emotional connection that taps into a wider insight around Australia and Australians. It's forward-looking. It allows a more dynamic and energetic approach to how we position Australian wine now and into the future. And maybe most importantly, it allows us, we believe, to leverage that Team Australia approach to investment and amplify the positioning. And probably in the current environment, never been more important that we do maximise every dollar that we've got available to us to be able to build the proposition of Australian wine. So where we're at and some of our next steps. Well, we'll look forward to sharing progress with you over the coming months. In the meantime, after today's presentation, I'd ask you to please go away and just think about how your brand, your region, or your state could activate Open for Adventure. Whether that's what you're doing at Cellar Door, potentially how tastings are curated and delivered. Maybe it's distributor and retailer activations, trade shows, even visits programs, tourism collaborations. I think this is an opportunity and a platform that allows us to be as innovative as we like. If we're aligned, we can create and start to create certainly some critical mass in a time of restricted resource right across the sector. On that note, thank you for your attention. We've got a lot of questions that have come through over the last couple of hours. So what we're going to do is open up now to some of those, invite some of our earlier presenters back and work through from there. Martin, we might start with you. So we've been hearing lots of bad news, and we know it's tough right now. Are there any good signs out there you're seeing at all?
Well, yeah, I mean, it certainly has been the perfect storm that's kept on giving. I mean, one thing we are hearing from a couple of people is obviously, looks like the shipping costs are settled back down. The exchange rate's certainly working for us, so I'm hoping that's going to move some stock. We've certainly got a couple of people saying the number of inquiries are up. I also had a presentation yesterday from Rabobank on the global fertiliser price, so that's settled back down. So a few things might be working more in our favour, particularly the exchange rate. The other perspective I give you is, let's not, kind of in a funny way, let's not waste a good crisis. I mean, there's nothing like this current situation to bring people together. The response we've had from the workshops and the engagements we've been having at all aspects of the sector has been just tremendous. So there's a real willingness. There's some great people in this sector. So let's get some joined up thinking. So that's a positive thing in a funny kind of way. Let's not waste this situation and get some real joined up thinking around some opportunities as well as dealing with the challenges.
Okay, great. And while we've got you here, next one scrolling through. Will the one sector plan be a precursor to another plan?
Yeah, look, I mean, so a lot of people say, well, God, let's not have a plan to have a plan. We've done quite a bit of work in ESG. You're going to see the emission roadmap come out. So we've done a lot of work, I think, and some of the stuff is ready to go. But some areas will need some more planning. I mean, for example, this aspect of data across the supply chain, really getting better data. We do a lot of data. We hold a lot of data on the demand side, but actually handle more through the supply chain, I think will be really beneficial. But we do need to have a data and information, digital and data strategy. So some of the aspects will need some more planning, I think, yeah.
Okay. We might come back to if we've got
Thanks,
time.
Paul.
I think there's a few there. Pete Bailey. So you're a very popular man, Pete, lots of questions. Regarding the varieties and styles of wine, what wines are driving the growth of our premium segment in international markets? That's a tough question because it's pretty broad.
Yeah, it varies by market. So if you're looking at Asia, sort of 90% of our exports into that market are red. Whereas if you're looking at the commercial segment, it's sort of, 2/3 are red and 1/3 white. If you go to the US market, most of the varieties are declining at the commercial end. But for the premium end, we're actually seeing some good growth for Chardonnay and Cabernet. And then you go to Europe, it's much more evenly split between reds and whites. So at the commercial end, it's roughly 50-50 between those two. But then when you go up to premium, it's sort of 3/4 red and a quarter white. And then in the domestic market, at $15 to $30, we're actually seeing growth in a number of varieties, including Shiraz, Cabernet, Grenache and Pinot Noir on the reds, and sort of Chardonnay and Riesling for whites.
Okay. We hear a lot about, not just, everywhere about lighter styles, whether that be red or white. Is that something that's been borne out in what you're seeing in the research?
Yeah, absolutely. So those sort of lighter styles are certainly gaining momentum in a lot of markets. And it also sort of plays into, consumers wanting to, drink lighter alcohol as well.
I think you might have already answered this with the last question, but do the varieties and styles of wine seeing growth in premium segment mirror those in the more commercial end of the market?
I pretty much answered that with that sort of those splits between reds and whites. But I think it's fair to say that sort of whites are in sort of greater demand globally than reds, which is sort of one of the reasons why we're seeing sort of great prices for reds, particularly in the inland regions, dropping pretty dramatically over the last 2 or 3 years. And sort of the ABS forecasts, which have come out just only recently, predicting that's going to continue in 2024.
Is the preference for red wine, we've talked about a number of markets where red wine at both premium and commercial levels is dominant in what we're exporting out of Australia. Is that just because what we produce, so that's what we've got to export, or do you think that's actually what the markets are looking for?
Well, I think in Asia, reds are certainly the preference, and that was the same with China. Where sort of 90% of what we were sending to China was red, but premium red wines as well.
Yep.
So it's definitely a preference for reds into those markets.
Cool. All right. Well, again, if we've got time, we might scoot back at the end. Thanks,
Thank
Pete. Laura.
Yes.
Sorry, it's hard to read off the little handset. What work is being done to expand our reach in the UK and Ireland, given that they are two of our strongest markets in the region?
Well, we have very limited resources in the UK, as you know. We're a very small team. So a lot of our focus is in the UK. And as I said, we've got the ATT coming back up in January. We're going back to Edinburgh. We've been doing a lot on the education side, working with importer sales teams, retailer sales teams, to get that perception of premium wine up. So that's been a real focus. And then over in Ireland, we work very closely with the embassy, and Emma's been over doing masterclasses at the embassy, and again we do as much education there as we can. And in fact our last inbound visit before everything closed down was the group of sommeliers from Ireland. So we've been keeping in touch with them to make sure that they're still our ambassadors. So yes, two key markets and a real focus for the team in the UK.
Okay. Well, you've got a few questions here, so while we've got you on the spot, we'll keep going. What work is being done to improve the standing of our premium segment in the UK and Europe? You may have already answered part of that, but
yes, and I think as I acknowledged in what I was saying, it's really important that we understand that in the UK, Australian wine has 25% share of the market in the off-trade, and that is driven by the big brands who are doing a fantastic job. And we will always use them as representative styles in our tastings, and they're as welcome to join our tastings as anybody. But we've also then got a whole raft of importers of premium wines, and they are the ones that we probably focus on more for some of our education events because they fit the theme and the level that we want to show, and also the target audience. If we're talking to fine dining sommeliers on trade, then they're obviously going to be interested in those premium wines, so that's the focus. And picking up Pete's point just then, the move to sort of lighter styles, the crunchy, not allowed to use the word smashable, but those sort of crunchy, lighter weight,
You can responsibly.
red styles are definitely gaining ground, and huge interest in whites, Rieslings, and as I said, a big resurgence in Chardonnay, probably driven because, to a certain extent, because of the cost increases in Burgundy. So fantastic opportunity for premium Australian Chardonnay to take some of that real estate on wine lists.
Yeah, I think that's a really important point as well. It's sort of counterintuitive that we read export reports over the last sort of 6 to 12 months. We see our UK numbers declining. And in spite of that, our market share is actually going up. So while we're declining actually slower than the rest of the market. So relatively speaking, if we can take a positive, that's a positive.
Absolutely.
But clearly a lot of opportunity in the on-trade, the independent and the on-trade. So
Yep.
that's great. And lastly, but not leastly, how much sustainable or organic wine on wine labels being sought by buyers and retailers? Again, I think you touched on that a little bit with the monopolies. I think you might have even mentioned that there may even be some tenders at some stage down the track that are quite specific.
Yeah, so organic is something that the monopolies have particularly been looking at for quite a long time. So in Sweden, we know that the average level of organic wine with them is 21%, whereas for Australia it's only 6%. So again, there's quite a big gap there. So that gives us an opportunity. Sustainability covers the whole ESG, and particularly they're looking at packaging. I think that's the main focus for a lot of UK retailers as well. So lightweighting of glass, alternative packaging. We've seen the flat recycled PET bottle having quite a lot of success with some of the big Aussie brands. I know Wakefield and Hardy's with Banrock Station and Nottage have been doing it for some time, and those are getting a lot more acceptance. And then the other bit is premium bag-in-box, so smaller bag-in-box but premium wines, and there's a lot more acceptance of that. So yes, absolutely, if you've got an alternative packaging. And the one I didn't mention was cans, so small cans, and I think again the retailers are really looking to move their single-serve wines into cans away from either the small glass or the small PET bottles.
Clearly there are already some brands out there doing some interesting work in the can space.
Yep.
I think bag-in-box has always been a bit more challenging for some of the Australian producers, unless we're shipping and then packaging in Europe. But
and an image perception, I think, of quality, whereas in certainly the Nordic markets, bag-in-box is seen as not cheap end, but absolutely premium.
Great. Thanks, Laura.
Okay.
Aaron, let's talk North America briefly. You mentioned before earlier around what we're doing and the balance we try and have between that premium and commercial. Can you go in maybe just to a little bit more detail on what that potentially looks like? Just in how we go about balancing what we're doing there, supporting both ends of the
Supporting both ends of the market.
Yep.
It's a big question. Maybe we won't have time for it today. If the person who asked that question wants to connect for a more detailed response, I'm absolutely happy to.
Sure.
I would say generally speaking, it's very much driven by the customer and the opportunity. So if we pick that cluster of programs, with Kroger, Binny's and HEB, for instance, those customers are telling us what wines they'd like to include in activities. So if the customer is invested mostly in the commercial wine space, the assortment of products available to do some programming, it's their decision, and we come up with creative ways to amplify sales of their products and hopefully hook them onto, some different thinking about the category. And then, if you look at the LCBO, for instance, so one of the photos in my presentation was called a nesting table. And certainly in my career, I've been trying to understand why it's called a nesting table. But it's essentially 12 products arranged in a really high traffic area of a store, with, kind of tables and POS and so forth. But again, the LCBO is isolating 12 products that they'd really like to put on a particular activity. And because it's the LCBO, most of those products are commercial. Just coming back to how important it is, though, for the customer, not just Wine Australia's winery customer, but when we're in the US, what is a distributor looking for from the Australian government to help its sales, or what is a retailer or what is a wine writer looking to understand about Australia to then share with their audience? So that's a big evaluation process that we have to use. If a journalist says, I'd really like to write a story about Riesling, and we ship a box of mixed Pinot Noirs, we're not really meeting that journalist where we need to in terms of what their focus is. So when the education team are building seminars, or even in the Gallo discussions, we put commercial and premium in complete equilibrium in terms of what we want to tell as an Australian story. But if that customer wants to take the direction of the conversation in a more premium area or into a more commercial area, we have to respond to that. We've got a great wine offering, and we can be incredibly diverse and broad about what we present to the world. But if what we're hearing is there's more interest in this area versus that area, we need to channel the energy where it needs to go.
Yeah, guided by the customer. I guess ultimately it's channel management as well in many instances.
Absolutely.
Yeah, okay, thank you. Another question, I guess, just leading on from that as well. You spoke quickly about the amount of fantastic press that we've seen in the US over the last 12 months. Has that been something that we've driven within the US market? How do we facilitate trying to make sure that those stories get told?
It's a good question. It's a little bit of both. Deirdre, in the marketing role in North America, does a fantastic job of, giving really contemporary and exciting, story ideas to journalists. Mm-hmm. We were lucky enough to host Christina Pickard in Victoria in November of last year, which was delayed for 3 years because of the pandemic. Christina continues to use material that she collected from that visit to write stories about the category. I did distinguish a little bit in my presentation between journalism and scoring, because I think the scoring publications are really key. And over the last few years, we've actually, and I'd love to claim this as Wine Australia's efforts, but it may or may not be. But, the performance of our wines in some of those publications in terms of achieving 90 points or greater has actually been inching up a little bit, which I think is a fantastic third-party endorsement of the quality of our offering. But again, it's a little bit of both. I think we directly support, the media in terms of what they understand about what's exciting and newsworthy about Australian wine. But if you look at what they write, it's just they pick up on really fantastic, aspects of what the Australian wine community is actually doing. I think going forward, a huge focus is going to be on sustainability. I think Australia has got an unwritten opportunity in that space to be recognised a little bit for what we're doing today, but a little bit about where we can potentially take that. Proof point, yes, but some of the industry standards that are required and demanded of sustainability. Laura talked about the strictness of tenders. We're absolutely seeing that from the LCBO and the SAQ, and from businesses like Whole Foods in the US as well. So there's a media element to that where we want to be able to generate and amplify some storytelling that support Australia's sustainability credentials today, but also support how we're achieving excellence in that space.
Yeah, and this isn't a question, but just to pick up on one of the comments, I think, in your presentation, you said where we are today versus where we are a few years ago, and being able to knock on a distributor door and actually get them to open it and want to talk about Australian wine has changed a lot. I think that goes to a lot of the evolution of the styles of wines that we're actually making right across the country. And I think that's being reflected in a lot of those articles. I think there is now, it's almost a generational change where, all right, maybe Australia is starting to come back into vogue again.
Absolutely.
Yeah, fantastic. All right, thanks, Aaron. And Sarah, you don't get off the hook either. I've got a key one here for you. What type of activities are being prioritised to increase the awareness and profile of Australian wine, particularly in Japan and Korea?
So hopefully I answered part of that, at least in my presentation. I think for both Japan and Korea, having resource on the ground for us is, pivotal in itself, because it means that we can be there consistently building and growing the conversation around Australian wine, and we can actually react to opportunities as they arise. So we've already seen some pretty, big impacts from that already, particularly in Korea with the work that Susie's been doing with education, just absolutely just getting as many trade through her sort of education modules to really update their knowledge and make sure that they're really confident in Australian wine. Has seen, you know, people running out to bottle shops to buy wine straight away. So I think, you know, she's laid a good foundation in doing that. She's also been leveraging trade media and online media channels to continue that education piece as well and just get the word out there. Like I said, the grand tasting's coming up, and this will really try and sort of tap into those trends that we're seeing, those sort of interest in those new varieties and styles. And then moving forward, you know, just trying to sort of build on that in both trade sales activities and consumer sales activities. In Japan, as I mentioned, Rose has been doing a lot of collaborative activity. She's also been sort of jumping on a lot of opportunities as they arise. And sort of being present and in a, you know, thought leadership role. So Tourism Australia has been quite active with a lot of media activities, and she's been there presenting for Australian wine. Also in sort of the sustainability space as well, with some leading importer associations, and really sort of being present and being heard for Australia. So I think, yeah, having resource in those two markets is making a big difference already. They're only really 6 months in as well to their activities, so I think we'll see a lot of traction moving forward with those two markets.
Great, thank you.
Welcome.
All right, getting the wind up at the back, so let's wind up. I'd just like to finish today really where we started, and that is to acknowledge that we really do understand and appreciate just how tough many people in the Australian wine family are doing it at the moment. And we're all hopefully trying to pull together to make sure we can find some resolutions that are going to work for us now, but also into the future. The purposes where we started today was to provide an update on the state of play in where wine sits internationally, within Australia, and where we're positioned to, or how we're positioned to respond, I should say. I hope that today's update has provided you with some of those insights. Where the areas of market opportunity may be for your particular brand or your particular region. But also, you know, the door remains very open. If you've got questions, if you've got suggestions, you know where to find us, please feed them back. We'll continue to work through the activities that we've detailed today. And we're very happy to try and cover any questions that haven't been covered in today's presentations or through the Q&A session at the end. I'd really just like to thank you all for your attendance, for your attention, and on that note, say good morning.